News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest on U.S.-China relations after President Donald Trump's long-awaited meeting with Chinese President Xi Jinping. The two leaders came face-to-face on the sidelines of the APEC summit in Busan, South Korea, and walked away with an agreement to cut fentanyl-related tariffs in half to 10%. President Trump says China has also agreed to buy U.S. soybeans again. On a scale of 1 to 10, the president said he would rate the meeting a 12.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China.
President Trump spoke aboard Air Force One after the meeting. China's response was a bit more muted, as we hear from Bloomberg's Stephen Engel in Busan.
He did say that China will cooperate with the United States on trade, again, after that hour and 40-minute meeting with Donald Trump. But he also went on to say, with a little bit of a cautionary tone, he said the U.S. and China should not fall into a vicious cycle of retaliation, and says the U.S. should continuously reduce the list of problems. China and the U.S. should continuously reduce the list of problems, and that the two nations should eye long-term benefit from cooperation.
Bloomberg's Stephen Engel reports China has agreed to suspend rare earth export restrictions for 1 year. It says the U.S. will also pause some of its so-called reciprocal tariffs for a year. China also says it will resolve issues related to TikTok with the U.S. side, though it did not give specifics.
One issue that apparently did not come up, Nathan, in President Trump's meeting with Xi Jinping was Nvidia's Blackwell chip. The president had indicated he might discuss giving China access to the AI chip giant's most advanced semiconductor. Trump says he and Xi talked about Nvidia's access to China in general, and those conversations would continue. Speculation that the U.S. might greenlight sales of more advanced chips drove Nvidia to become the first ever $5 trillion company.
Well, let's turn to the market reaction now, Karen, to earnings from three high-tech heavyweights. Shares of Microsoft are down 3% in early trading. The world's largest software maker reported a steeper climb in spending than Wall Street expected, though profit and revenue topped analyst estimates. And the Azure Cloud Computing Unit posted a 39% revenue gain. That was also a beat. Anurag Rana is a senior tech analyst at Bloomberg Intelligence.
When you look at Azure growth of 39%, I mean, given that size, that's pretty good. The margins actually stood out way higher than what we were anticipating. We thought there was going to be pressure on margins because of all the spending. And then lastly, when you look at the CapEx number, substantially higher than the $30 billion that they talked about. Now, to some people, maybe that's a disappointment, but for us, that's a good thing because I think they have so much demand coming in.
That's Anurag Rana of Bloomberg Intelligence. And on the company conference call, Chief Financial Officer Amy Hood said Microsoft can't meet current demand for AI and other services.
Well, shares of Meta are also pulling back this morning, Nathan. They are down more than 8%. The Facebook owner is projecting increasing expenses, and it's taking a one-time tax charge. We get more with Bloomberg's Charlie Pellet.
Meta said the tax charge of $15.9 billion was due to the implementation of the tax bill signed into law in July. Ivan Feinseth is a senior partner at Tigris Financial Partners.
So the big, beautiful bill caused the recognition of a deferred tax asset. It's actually a non-cash charge. And while it caused a spike in their tax rate to 87% for the quarter, it actually goes down significantly going forward. I think this is really a non-event. It's an accounting issue. And I think any weakness is a buying opportunity in the stock.
Meta says it will continue to invest aggressively in artificial intelligence. In New York, Charlie Pellet, Bloomberg Radio.
Okay, Charlie, thank you. Now, on the flip side, shares of Google parent Alphabet are up 7%. Sales topped quarterly Wall Street estimates, fueled by a surge in demand for its cloud and artificial intelligence services. Brooke May is a managing partner at Evans May Wealth.
Alphabet is the horse that I would put my money on right now. They've blown their earnings out of the water. Not only did they have good earnings growth, but the cloud growth was very strong. Search is strong.
Evans May Wealth's Brooke May. Alphabet says capital expenditures for the year will be $91 to $93 billion. That's up from an earlier estimate of $85 billion.
And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.